with that, again, thank you for joining us for LISC Financing Programs for Diverse and Emerging Suppliers. I'm going to turn it over to Yvonne Durbin from LISC to take it from here.
Great. Thank you so much for having us. We're excited to tell you a little bit more about LISC and about our programs. So my name is Yvonne Durbin. I'm the director of the Capital Innovation Lab at LISC. I've been with LISC for 3.5 years now, and I sit on our strategic investments team. And basically my team exists in order to provide financing solutions to small businesses that aren't being met by traditional loan products or equity investments that already exist in the market. So we've tried to create some new programs and products that really fill gaps for diverse small businesses. I'm joined today by my colleague, Charlene Frank. She's off camera, but will be in the chat monitoring in case you guys have any questions. She can flag them for me or answer them along the way. So a little bit more about LISC to begin with. It stands for Local Initiative Support Corporation, and we are a CDFI. So that means that we are a nonprofit and we operate nationally across the United States. And our mandate is really to serve historically underserved and underrepresented communities across the country. And we have 38 offices now. So we have local presence in a lot of cities across the country. And we run some very hyper-local programs in those places. And those local offices are supported by national teams, such as the one that I lead. And we kind of work across the community and economic development ecosystem. So we do everything from affordable housing to childcare focused work and healthcare focused work and education. And of course, small business lending and our innovative small business investment programs. So that's just a little bit about us. I'm going to dive in to talking about 2 different supplier diversity programs that we run right now. So I'm going to start with our growth capital program that is a partnership that we run with JP Chase. This is an industry agnostic initiative that allows us to fund business to business focused small businesses that are trying to win more contracts and opportunities with the Fortune 1000 corporations of the world. So we currently have a pool of around $15 million. And we're able to support diverse businesses through providing types of capital that works a little bit differently to traditional debt and allows us to fund really those barriers to growth and expansion. So we are running this program for the next few years, so there's not a major rush on it. And we do pair our capital with technical assistance, helping small businesses to kind of get capital ready if they're not ready at the outset. So I'm going to spend a lot of time on this very text-heavy slide talking about what we're doing and the eligibility requirements and everything like that. So this program is really designed for businesses that are nearing or at $1 million in annual revenue or above. You do still have to be small though by the Small Business Administration standards. So that's different depending on the industry that you're in, but those are our revenue parameters. And we do look for businesses to have been operating for 3 or more years. We have those requirements in place because really what we're trying to focus on here are those businesses that are just not quite there yet to being able to work with somebody like JP Chase. Doesn't have to be JP Morgan. It could be any kind of large corporate player. And sometimes we work with folks who have majority government contracts as well. But we're really looking for those who have been doing well and now are facing hurdles to being able to get to that next level and win those larger opportunities. So we focus on funding those items that are really hard to finance via traditional loan products. We'll fund things like cybersecurity certifications and upgrades, insurance premium increases. These are the types of items that are often listed in RFPs that are really expensive to put in place before you've actually won the contract, but make you much more attractive to being able to actually secure those opportunities. And then we can also fund sort of general growth and expansion plans, technology upgrades. Maybe you need a better inventory management system or CRM to be able to operate at that next level. But basically, we can fund anything that's kind of one-time and finite in nature, and it allows you to get to that next level of your growth. We try to be as flexible as we can be in what we fund, but if it's a really good fit for a traditional loan, we would probably rather stay away from it because we have this really special pool of capital that we're able to deploy. Why is it special? So we're able to fund requests ranging from $25,000 to $250,000. Sometimes we can go above that for particularly larger, strong businesses. And the money is at no interest, and it's designed to be patient and flexible. So what that means is that if you have a request for us that's $200,000 and it's insurance upgrades and a tech overhaul and marketing needs, we'll fully fund to that budget. We'll give you some time to put the money to work with no payments, usually 6 months, and then you'll pay us back. And our term ranges usually from between 2 and 5 years, but we'll scale it to your individual business needs. You'll pay us back in monthly installments until we're made whole, and there are no fees, no interest whatsoever for the businesses in this program. And what's more is we design our paperwork to be flexible such that if we need to make changes, say, instead of it taking 6 months for you to begin paying us back, it's going to take 9 instead because something was delayed. We're very easily able to make those changes because we want to be considered your partner in this growth plan. So really, we see ourselves as a stand-in for a friend or family investor for folks who may not have that wealthy network to tap into. So this is a very unique program. Obviously, there's not a lot of capital out there at no interest with these kinds of flexible terms. So that's why we're really focused on these specific types of use cases that are historically difficult to fund. And so this is really what we're doing here in a nutshell. And I want to dive a little bit deeper into how this differs from a traditional loan product. As I mentioned at the beginning, LISC does have a small business lending team. So we might work with them if a business needs permanent working capital and they're needing to purchase large machinery, commercial real estate, kind of those more classic loan use cases, whereas we're taking on things that don't quite fit into that box. And our underwriting looks a little bit different from that traditional lending as well. So we focus a lot on the future. All the businesses that we work with are asked to submit pro forma projections to us so that we can get to know where you think you're going and your plans for the future. It allows us to make investments in businesses that potentially have had a couple of hard years in the past. We know folks are still recovering from COVID. And so if you have a strong path into the future, we likely can still work with you as opposed to a traditional lender who may have to rely on those historicals more. We don't pull credit for our investments. We run what's called a clear check, which shows us sort of bankruptcies, tax liens, those items that we might need to know about, but it's not a credit pull at all. So we're not looking at that number. And these are also uncollateralized and they have no personal guarantees attached to them. So it really is designed to feel like equity, but not take an equity stake in your business. So this flexibility and the kind of difference in underwriting versus traditional also sets the program apart from what is out in the market. So I want to talk next about our second supplier diversity program, and then I will talk after that about how you get started and how you work with us. So in addition to our industry agnostic program that I just spoke about, we have a healthcare sector specific program. And this is in partnership with Abbott. And when I mention the funders, they're wonderful partners for us, but it does not mean that you need to work with them in any way or have any intention of working with them in the future. These folks work with us to kind of grow the pool they're fishing in. So they're looking to uplift small businesses and diverse businesses generally through these programs that LISC runs. So it's not that you are needing to work with Abbott. So through the healthcare sector specific program, we have some slightly different eligibility requirements. So we're able to work with businesses down to around $250,000 in annual revenue and 2 years in business. So often a little bit smaller than the ones we're looking at in our industry agnostic program. But you do have to have or be pursuing contracts in the healthcare industry. So that can be very broad. So it can be pharmaceuticals, it can be hospital systems, kind of anything like that. And it isn't that you need to be a healthcare company yourself. You just have to be serving healthcare clients. So if you're a marketing consultant, for example, who seeks to work more with Pfizer, that's a good fit for this program. You don't have to make pipettes. So we try to be flexible when it comes to that as well. And we have 3 prongs to this program. So the middle tier here, the growth capital, works in the same way as the growth capital that I just described in our larger industry agnostic initiative. So we have a $5 million pool there, and we're able to provide those same no interest investments in businesses that have those upfront growth costs and needs that we're able to address. But in addition to that, we have 2 other offerings through this program. We have small business loans. So we'll do permanent working capital or commercial real estate. And we often compare that, or like if you have a working capital need and a technology need, we can put our growth capital and our loan capital together to really fulfill all of the capital needs that a particular business has. And our small business loans are offset by a loan loss reserve pool. And so that enables us to have very, very competitive interest rates in this program, supporting specifically healthcare sector businesses. So those are the 2 capital resources that we have available here. The third prong to the program is a technical assistance offering. So LISC has a number of partners that we've sourced specifically for the type of businesses that are coming through this program and who are seeking further contracts in the healthcare sector. And so we will pair prospective businesses with our technical assistance providers who will often work with you for 3 months or even longer on the specific problems that you are facing as a business. And so that might be helping you fix up your financial statements or your taxes. It might be working through your business plan, projections, growth initiatives, getting you set up with the right mentors to understand what your next steps should be as a business. And that technical assistance, we will sometimes do before providing capital and sometimes simultaneously. So when you come in the door at LISC, we'll assess where you are, what your current needs are, and kind of what we think the path should be with us. So if you're not quite ready for capital, perhaps you're not large enough in terms of our revenue requirements, or there are some concerns that we have with your financial situation, your business plan, we might send you first to our technical assistance provider to see if they can help you get to a place where we are then able to fund you. And sometimes we'll work in tandem. So this program, it's actually a $37.5 million initiative. So we have capital from Abbott and capital off of LISC's balance sheet that we've really put together to manage this program. The last thing I'll say about it is that whereas our industry agnostic initiative for slightly larger companies is going to go on for a few more years, At this point, we do expect the healthcare sector program to expire at the end of 2024. We'll see if that changes. Potentially it will, but for now, if this is the program that you're the most interested in, we would love to talk to you sooner rather than later, because we're going to be finishing up deploying our capital here this year. So how do you do this with us? There are 2 links, and we'll share this deck out with everybody at the bottom of this form. And really, for both of our programs, you fill out a request for information, and it tells us a little bit about your business. It tells us where you're based, what certifications you might have, and it asks you kind of what your sizing is, how many years you've been in business, so that we can determine very baseline eligibility. We then set up an introductory phone call with you, where for 30 minutes, we get to know you, your business, your needs, and we tell you a little bit more about our products and offerings. We know, this is only a couple of programs that LISC offers, and we do have those 38 offices. So we don't expect you to have memorized everything on our website. We're there to listen and figure out what we might have that could work for you. So we'll do that kind of triage and get to know you and your needs a little bit. And if we think we have a potential program fit for you, we'll ask you to submit an initial set of documents for us to begin our underwriting and review. So we always start with tax returns, current and last year income statement and balance sheet, a debt schedule, and projections for the next couple of years. We also want to understand how much funding you're looking for and what it's for. So those are really our basic asks at the very beginning. And once we get those documents through, we'll be able to review them, get you assigned to an underwriter who you'll work with all the way through our process. So we don't consider this application necessarily, because it's not like you submit one thing to us and then we give you an answer. Instead, this is an ongoing process where we're going to work with you. We're going to request more documents so we can understand what we don't understand. We're going to work with you to figure out what the terms should be, how much funding we can provide. And we'll also be able to tell you if for some reason we can't fund now, what we would need to see in order to have you come back through to us in the future. So it's really a partnership throughout. You're going to hear from us all the time, not just be waiting to get feedback at the very end. So once we determine that we have a program fit and we're able to move you through our underwriting, we do go to a committee for approval, and then we provide you with a letter agreement for you to sign and for us to countersign, which indicates that we can disperse funds and start working together. So this process is really the same between the 2 programs. We do have 2 different forms for you to begin talking to us with. If there's one or the other that is resonating a lot better with you, that's definitely where you should start. But there are a lot of the same people working on it on the back end. So we'll make sure that you land in the right place. So I want to talk a little bit about kind of case study for you, just so you can get to know what types of companies are working with us in these programs. So we have here US Translation Company, and David is somebody who actually came through a webinar that we did just like this. It was LBAN, the Latino Business Administration Network. Ooh, I might have gotten it a little bit wrong. But this is how we meet great people who end up working with us. So I appreciate you joining today. And he provides translation and interpretation services out of Salt Lake City, Utah, and employs 11 people. And in order to work with the larger partners that he was looking to work with in order to grow his business, he needed these very specific cybersecurity certifications and compliance upgrades. And also some CRM upgrades that makes him faster, more agile, and really able to work with the big players who are in the market. So we were able to provide him with $178,000 in order for him to meet the compliance requirements set forth in a couple of new contracts that he had. So he was able after this to finalize the contract he had with Maximus New York and with Toyota, which are bringing him up in his annual revenue fairly significantly. So we're really excited to have folks like that in our program. And I will say that we try to do our best to make introductions between the small businesses that we invest in and with our funders so that we're building out this network, and people can really get connected to folks that they might not otherwise know, but should know to be able to run their businesses together. So I think I ran through everything pretty quickly here for you guys. On the last slide, I have contact information for myself and for Charlene. Feel free to shoot us an email if you have specific questions about your business and how things work or what's going on. But otherwise, if you fill out one of our forms, you'll end up talking to somebody from our team anyway in your 30-minute intro call. But otherwise, I'm happy to dig in a little bit more if folks have questions about what we're doing and how we do it. So I'd like to, I think that's our next slide, head there to the questions slide. And please let me know if there's anything on your mind.
Thank you so much, Yvonne. That was some great information, but as you said, there's quite a lot there. So we do have some questions. The first one is, when you are thinking about the growth, are people looking at federal contracts or corporate contracts or both? Where does that sort of fall?
Good question. So our primary focus is around corporate contracts, but we often work with people who have both, and we do sometimes fund businesses that have exclusively federal contracts, because while we're focused on this B2B space, we recognize that if you meet the requirements of government contracts, which are often hefty, you'll be able to work with the corporate partners as well later on. So sort of a non-answer, but it is everything.
Excellent, thank you. And then another question went back to the eligibility for the health care one. Could you just give a bit more information about who counts as underrepresented or underserved?
It's a good question. So our primary kind of focus in the diversity programs has generally been minority-owned businesses, women-owned businesses, disabled-owned businesses, LGBTQ-owned, and veteran-owned businesses. We, however, in our current legal and operating environment, have expanded our programs to also be able to include emerging businesses too. And so essentially what happens is we as a nonprofit need to make sure that we are meeting our mission with each of our investments. And so we look holistically at the businesses who come through our door to see that they meet that charitable purpose that we have. And so people can do that in a number of different ways. They can have faced some kind of personal barriers to having grown or started their business over time. So that might be if you were a disabled-owned business or women-owned business that you face personal issues, with starting up what you're trying to do, or with access to capital. Access to capital is also a huge one for us, and that's actually why CDFIs existed from the beginning of time, is to provide financing to those who are not as easily banked in the traditional banking space. So that's something that we look at. We also look at the environment, whether you're helping support, change towards more green practices in your industry. We look at whether you might be lessening the burden on government in your sector. We look at whether you're located in a low income census tract or a hub zone, or you're employing a majority of low income people. And so we really kind of try to take in a really holistic approach on the who can come through our programs, and really say now that the baseline is 2 years in business, 250K in annual revenue, and facing some barriers to being able to grow.
Excellent, thank you. And just to follow up, does it help, or is it necessary to be certified if you are saying that you are, say, a woman-owned business or a veterans-owned? Do you want to see that certification, or are you not needing that?
We don't need that. We know that a number of the corporations that might like to work with the businesses do like to see that for how they count their numbers, but for us, it's not a requirement. And I will add, can often provide funding for getting those certifications. So if that's something that you're looking to do and you're not sure like what all the hoops are you need to jump through, and you want to hire somebody to help you do it, we've provided that type of funding to help work through those very arduous certification processes.
And we just had a clarifying question from David. So businesses with less than 2 years do not qualify.
That's right. We look for 2 years of operating history. And so we can sometimes slide that a little bit if you're nearly there and you're able to provide us a lot of backup financials and you've been doing solid revenue for like 18 months, let's say. But we really need to see some historical track record and just aren't set up to work with startups.
Excellent, thank you. We've got some more coming, and keep putting them in the chat box if you think of others. But someone wanted just to check, what's the typical timeline in terms of securing the funds?
It's a good question. So I generally say 6 to 8 weeks to an approval from when you submit that first set of documents to us. So we'll have that conversation, and then we'll ask you to send through that first set of underwriting documentation for us. Once we have those documents, that's when our clock starts. So we know sometimes for businesses, it feels like it's longer because they're pulling the information together and maybe they send us half of what we need. Our clock starts when we have everything. And then it really depends on the complexity of your business and what you're trying to do and how difficult it is, because we'll have some back and forth. We might need to ask for more information to get comfortable. But from there, we're generally saying 6 to 8 weeks until we have an approval from our committee, and then a couple more weeks until you have funds in your account after, because it takes some time to sign the papers and get the bank accounts all connected and everything like that.
Excellent, thank you. And then you may not be surprised by this question, but if somebody is deaf or blind and needs accommodations, are you able to provide that?
It's a good question. And so we are striving through these new partnerships to figure out how we should do that. And we would love to work with you if you need an accommodation, and we'll find the right people to help us make that happen. So I can't say that we have done a ton of it yet, but it is why we're here, and we want this program to be available to the folks in this space. So please reach out and we'll make it happen.
And of course, Yvonne, you know, you can always reach back out to NDI if you have any questions, if we can support you.
Yes.
And then you talked a bit about technical assistance. So say somebody approaches you and they're not quite a fit at the moment. What kind of support do you offer to help them get there? Or can you recommend other programs if somebody isn't going to qualify?
Yes. So we have a number of different kind of tools at our disposal. The first occurs with our underwriters, like Charlene, who's with me here today, who really spend a lot of time with the business owners and with their financials. And so we're going to go through with a fine-tooth comb and kind of kick the tires with you and ask you questions point out things that we would need fixed and kind of go through that with our business owners to help them get their documentation to a place where we can underwrite it or where somebody else can underwrite it. So first is that time that we're spending one-on-one. If we from there find that we still can't necessarily move forward, like we're recommending that you get a new accountant, for example, because everything is just not right. We'll do our best to find you a referral. If you're in one of our local, the cities that we have a local office in, we'll get you connected to the local office. And if we have partners where you're located, we'll get you a reference so that you can find the right resources externally and then hopefully come back to us. And as I mentioned in the healthcare sector program, we do have that specific technical assistance component where we're pairing you with somebody who's going to work with you for 3 months. And so they're going to really spend even more time through a different lens, right? Because they're not trying to underwrite you. They're just trying to help you get situated. So a lot of times those people will work directly with our businesses too, and really help them get to a place where they're ready to go. But we'll do our best to make the connections that we can.
Excellent, thank you. And you talked about trying to network the small businesses that they can support and maybe even get services from each other. Just how many sort of small businesses have you served in these programs?
Good question. I think we're in the, 50 to 60 range now. We launched these programs in mid-year in 2022. So we're moving pretty quickly. I expect us to kind of work with 40 more businesses throughout this year. And so we attend a lot of conferences, as I'm sure you can imagine. So we'll go to the National Minority Supplier Development Council, for example. Last year, we were able to host a little happy hour event there, invite our investees so they can meet each other, meet some of the funders. Through our industry agnostic program too, we will do these kind of meet the business sessions where we will group businesses together. The last one we did was construction focused, and tell the funders in that program, you know, hey, if you want to meet construction industry businesses that we've already vetted, come to this event. So we could kind of do that. Intros, a little bit of matchmaking. Can't promise anything, but we try.
Sounds great. And then someone's asked, how many applications are received versus those you accept?
It's a good question because a lot of people kind of fall out of the process at various stages. So our underwriting is kind of a rigorous process, and we do ask for a lot of documents, both upfront and then throughout our process. And so I would say versus the people that we decline, there are way more who kind of start and then never provide us everything we need to get to an answer. So with that in mind, if we talk to 100 businesses, we probably fund 8 or 9 of them. But we have the folks who fall out of the process on their own. Maybe they can't find those documents. They're not ready to do it. They're not sure what they want to use the capital for yet. And they come back to us a year later. We do sometimes have to decline people through our underwriting process. While I mentioned that we can be very future looking and focused, if we do have somebody who's got a track record of losing money year over year with not a clear path to change that, and they're carrying a lot of debt already on their balance sheet, we're probably not going to want to partner with that business unless something changes, because we, at the end of the day, we're flexible here, but we do hope to get most of our money back. And so we want to be trying to work with people who we believe in their growth plan. So some people will end up being declined there. Generally speaking, our declines are, they're not like a one-line decline email. It's more of a conversation about what are the things that we would need to see changed in order for us to work together in the future. And we might tell you, you can come back in 6 months. And so it's a pretty open door, and we hope that we're very transparent about when and why we can't make certain investments.
Excellent. And we do have one of our participants say they'll be reaching out to you. So they must be excited by what they're hearing. But following up from that last question, someone's asked, what role does credit history play in accessing capital? Some businesses max out their credit for growth and are denied from traditional banks when most needed.
So I'm hearing kind of two parts to that question, because credit, when it comes to like a personal credit history, is going to be a different part of the conversation to maxing out your credit lines. So in the first part first, we don't look at credit, so we're not going to know what your score is or that number. We are going to ask you about bankruptcies, tax liens, or payments that you're behind on. We can't work with anybody who's got an open bankruptcy case or tax lien, but we can absolutely work with folks who have cleared them a couple years ago, for example. So we do our best not to hold people's histories against their current situation. In terms of maxing out your credit, this is something that we see a lot, and we try to balance it to the extent that we can. So we'll often have people come through who maybe they have secured a bank loan or some line of credit elsewhere, but they really need more capital to be able to do what they're trying to do. And we will look at that and see if it's something that we are comfortable taking on. And often we're able to sort of take a slightly more risk than a traditional bank would be able to in that space. But we do still need to look at debt service coverage ratio for each individual business. And we'll look at it with your projections and your future plans. So if we see that you've got new contracts that are coming in next year, and it's going to mean you're able to take on more capital, we're happy to provide that. If we think that you're already carrying $1 million in debt and you're expecting to do $1 million in sales next year, it's going to be a little bit more challenging for us to come in because we just want to not overly burden businesses with too much debt to be able to operate. So our lending team is sometimes able to refinance high interest debts that businesses have. So if that's something that's of interest, we're happy to try to talk about that as well, to kind of get you positioned and in a better place to be able to move forward if you are carrying that type of debt. And I'll also say, that is the role of CDFIs. So we're community development financial institutions. LISC is a large one, we're national, but there are often local CDFIs around the country. And really our space in the country is trying to figure out how we can get businesses capital ready and help them get the right kind of capital to grow, where a traditional bank might not be able to step in and do it at a reasonable interest rate. And so talk to us, talk to other CDFIs. We'll try to figure out how we can get you in a spot where you're not taking on more and more debt, or where you're able to take on more debt if you need to. But this is always an individual conversation that we have, and will be a part of our first call probably, but then as we review your financials, we'll have more conversations about it.
Excellent. And looks like we're coming to nearly the end of the questions, but you did say that the healthcare is likely to be coming to an end, I think the end of this year, did you say? Do you have any other programs in the works that you could give us a sneak preview about, or?
Good question. We have a lot of different programs in the works, and it kind of depends on the types of businesses that are in the room. So we have, for example, a Black restaurant fund that's national and for Black-owned restaurants. And we are also we have very local programs in a lot of our offices. And so to be able to answer that, I would want to know where people are based to be able to connect them to what's happening locally. The other thing that's ongoing is that LISC was just awarded a large chunk of the green initiative dollars that were just released from the federal government. And so we'll be setting up a few sort of green initiative focused funds headed in through the end of 2024 and into the future after that. So there's definitely more to come there. And we are talking to some other folks about new and expanded supplier diversity programs. So kind of nothing to announce, but there's still a lot of interest in this space. And our industry agnostic program is growing every year. So I don't anticipate, 2025 being a year where there's no capital available to put out the door, but nothing major to announce just yet.
Excellent. So it sounds like people need to bookmark your website and keep in touch. Just really see how you may be able to meet their needs when they get to that. And then very lastly, we've got some people on the line who may not be at that stage yet. They may be at really just beginning their journey, and this may feel very daunting. With all your years experience, do you have one piece of closing advice in terms of how people can really think about that journey to get to the point where they may be able to access some of that capital we've been talking about?
Yeah, I think my advice goes back to the CDFI network generally. So while these programs are supplier diversity focused, right? And so it's really about those big business to business contracts. We know that's not where people start, right? Like we're trying to fill a gap in this middle section where we saw a hole in funding opportunities for businesses. But there are many CDFIs nationally, and especially the smaller local ones who are providing grants or who are able to write loans that are in the kind of $5,000 to $50,000 range. And that can be a really good starting point because that's like having a community banker who's also going to look at your financials with you and help you figure out how to take the first step in building a track record of kind of credit for your business. You've been able to repay, you're able to grow a little bit more, and then slowly move on to the next level. And the other thing that I'll say, which I'm sure everybody knows, is that networking is king here. I've seen this through all of the various affinity group conferences that I attend, that the folks know each other. That's how you win contracts and opportunities. It's how you hear about new programs. Staying in touch with us about, your business and what you're doing will make sure that we remember you when we do have something new in the pipeline. And so just get out there and talk to people.
Excellent. Well, thank you so much, Yvonne. This has been really, really helpful. And as a reminder, we will be sending out the links and Yvonne's contact information. And we'll also include the link to CDFI Locator so that you can look up in your local area and see who might be able to help you if this program isn't right for you at the moment. But thank you again, Yvonne. We're just going to close out with just sharing a bit more information about NDI itself. So we have...
I might have muted you instead of muting myself. I'm so sorry.
Not a problem at all. Something came up, still I was muted. So if you're listening here today and you're thinking, wow, I really want to work on my business, we have so many resources at our website, www.disabilitysmallbusiness.org. This might be if you're at the start of your business journey, if you are looking to grow, if you're looking to access the type of capital that we talked about here today. We also have a streaming TV channel. It has a whole range of informational and motivational content, specifically looking at how entrepreneurs with disabilities have started and grown their business, but also a wide range of other material. And you can find that either by going to Roku or Amazon Fire, but we also have a website where you can access it, which is www.disabilityowned.com. One of the great partners we have is Verizon. They have a wonderful program, the Verizon Small Business Digital Ready. And this provides, at your own time, online modules. You can sign up for mentoring or business coaching. They have live question and answer sessions where you can get your own personal questions answered in real time. And they also have grant opportunities where they offer a $10,000 grant for those individuals who have signed up and have completed at least 2 modules. And a new grant opportunity is going to be opening up very soon. And so if you're thinking that might be a way that you can help grow your business, definitely sign up. Again, the link is going to be in the follow-up email. But like I said, it's got some wonderful modules that you can do on your own at a pace that works for you at all levels for businesses. And then hopefully you're already on our mailing list because you're here today. But if you're not, again, we will put in the chat and also in the follow-up email the link so that you can find out more about all our upcoming events. And hopefully continue to join us as we partner with some wonderful organisations like we have today. Next slide. Small but mighty small business team. Nikki Powers, who's our director, Ruth Charez, who is our small business community navigator, myself, Caroline Bolas, and behind the scenes, who've been making sure this all goes smoothly, Lexi Jones, our business project coordinator. Next
And I
slide.
think that brings us to the end of the
That's it.
presentation. Yeah.
So thank you everybody again for your time. Watch out for the follow-up email that will give you all the links that you need. But thanks again to Yvonne and LISC and you all for joining us today, and have a great rest of your day. Thank you.